It is time for another 1 minute market update where we talk about the two things that you care about most if you are a homeowner. That is, how much is your home worth today compared to what it was yesterday, and how quickly would your home take to sell in today's market. Now, of course, because we are in 2025 now, it's a brand new year, we're also going to touch on what happened last year and some of the things that are changing for the year to come. I'm Angelo Manusiades with the Atlas Group at Stonehouse Realty. Let's jump right into it. So let's start off by talking about some of the changes that happened in 2024. The biggest one, the one that was on everybody's mind and all over the news constantly, was interest rates. We saw 5 significant interest rate drops throughout the year, starting about midway through the year. We started around 5% for the overnight lending rate and ended up at 3.25. Now, that doesn't mean that we're seeing mortgages at 3.25%. It just means that that's what the bank's overnight lending rate is. We're seeing them closer to about 4 and change, so in the low 4s. But it was a significant change from the 7.5% that some of the variable rates were seeing last year. The other big interest rate related change that we saw last year was bond yields going down. Now, I'm not an economist, this is not an economic YouTube channel, but very briefly, the bond yields were right around 3.5% at the start of 2024, and they finished off the year around 3%. Now, why that's important is that the government bond yields inform the fixed mortgage rates rather than the Bank of Canada rate, which is the variable rate. So that downward pressure has also dropped fixed rates down. Another really big change that happened in 2024 was the change in the allowable insured mortgage cap. So previously, if you were buying a home over $1 million, you had to put a minimum of 20% down. Now that cap has been bumped up to 1.5 million. Now, where that got tricky was right around that $1 million mark. Because if you were buying a home for $999,999, you could put basically 10% down, actually a little bit less than that. But the moment that you went over that $1 million threshold, you had to put a minimum of 20% down. So that's a swing of like $120,000 difference in down payment that you needed to put down. Now, you still need to be able to qualify for the full amount of the mortgage. So if you're buying a home at, let's say, 1.2 million, you can put less than 20% down, but you still, of course, need to be able to qualify for the full amount of the mortgage. So it's not like it's necessarily easier to get a mortgage, but it just means that you don't need as much cash right at the beginning to put down on that home that you're purchasing. So in a sense, it's made it a little bit easier for some folks to be able to move up into that larger purchase. Say someone who's owned an apartment, is selling it, and they're moving up into a bigger home. That sort of thing. That's the person that's going to help the most with this new rule change. Along with that change is, instead of having a cap at a 25-year amortization for new buyers and new builds, you're actually able to extend that amortization to 30 years, which also helps drop your payments a little bit based on that longer time frame. Yes, you are paying more interest because you're paying your mortgage for a longer period of time, but it helps keep your payments low while you are in the earlier stages of your mortgage, which can help make it a little bit more affordable and a little bit more attainable for some people. Other than those things, 2024 was very much a year of let's wait and see what happens. That was the discussion that we were having with a lot of our own clients, where they weren't really sure if now was the right time to jump into a home or jump into a bigger home, that kind of thing. But we actually saw that shift close to the end of the year. Especially October, we did start to see a pickup, an increase in sales and an increase in conversations as well. We also heard the same news from our mortgage partners, where they were actually processing a lot more pre-approvals closer to the end of the year. Now, generally speaking, going through a pre-approval is a bit of a pain, so most people don't do it unless they're actually planning on making a move. So that increase in pre-approvals really signifies that there are more people that are more confident in the market, at least as we got towards the end of the year. That's actually supported by the data as well. There was a 32% increase in home sales in December 2024 compared to December 2023. So what does that all mean? Well, it just means that 2025 is very likely to be a busier year for real estate compared to 2024. If the end of the year is any indication, with that renewed confidence and the fact that it is a little bit easier to get into the market with the rule changes as well as the lower interest, it's very likely that we're going to see things start to move a little bit better in 2025. Okay, let's jump into the actual market stats part of the market update. Now, I'm going to do it a little bit differently this time. We're going to talk about specifically what happened throughout the year. So the last 12 months of increase or decrease city by city for the HPI price. And once again, just a quick reminder, the HPI price is the average price of an average home in a neighborhood. And if you want specific data for your particular neighborhood, there's a link down in the description below. You can book a time to chat with us or send us an email and we'll be happy to provide that information for you. Anyway, starting off with Burnaby detached homes. You saw a 6.2% increase over the last 12 months, which equates to $126,000 in increased value. That's huge. Coquitlam, you saw about a 1% decrease over the last 12 months, which is about $18,000. Port Moody, a 0.8% increase, or about $17,000 in value. Port Coquitlam, a 0.6% increase, or about $7,600. Maple Ridge, a 3.8% increase, or about $47,000. That's also big. Pitt Meadows, another big winner, 5.6%, or just shy of $70,000. Okay, jumping into townhomes now. Burnaby, you saw a 0.8% decrease, or about $8,800. Coquitlam, the big winner for townhomes, you saw a 4.5% increase, or about $47,000 in extra value over the last 12 months. That's massive. Port Moody up 0.7%, or about $7,000. Port Coquitlam up 3.4%, or about $30,000. Maple Ridge up 3.8%, or about $29,000. And Pitt Meadows up 2.5%, or about $20,000. All right, and getting into condos now, starting off again in Burnaby, a 1.1% decrease, or about $8,500. Coquitlam up 1.7%, or about $12,000. Port Moody up 3.7%, or about $27,000. Another big winner. Port Coquitlam up 4.1%, or about $25,000, the other big winner for condos. Maple Ridge up 0.4%, or about $2,200, and Pitt Meadows also up 0.4%, or about $2,400. And as for days on market, or how long a home takes to sell, we're looking at the median number. So not the average, because the average can swing up and down quite a bit. We're looking at the median, the middle of the road number. Burnaby, you are up to 27 days. Coquitlam, you're up to 25 days. Port Moody, you're up to 21 days. Port Coquitlam, you stayed exactly the same at 21 days. Maple Ridge, you're up just a little bit, up to 32 days. And Pitt Meadows, also a tiny increase, up to 38 days on market. That's it. That's all she wrote. Now, if you have any kind of plans to move in 2025, there is a link in the description below. You can book a time to chat with us. We would be more than happy to go over your plans with you and help you start to put the pieces together for what a successful move might look like. That could even be stuff like, hey, how do I get my home ready to sell if I want to sell later on in the year? What are some things that I can do to make sure I get the most amount of money possible? Once again, I'm Angelo Manusiades with the Atlas Group at Stonehouse Realty. I'll see you in the next one.